Good evening, ladies and gentlemen. Welcome to our weekly investor update. I'm your host, Dan Thiel, Senior Vice President of Investment Banking. We're happy to bring you another installment of our weekly updates. Today we'll be looking at Caribbean Cement Limited and Express Catering Limited. We're excited to discuss both on our panel today. Most of you will recognize our co-host for today, Justin Scott, our investment banking analyst, a familiar face and voice on the panel. Welcome, Justin.
Glad to be here again, Dan.
Good deal. If you're a fan of the content, then don't forget to subscribe. Also hit the bell to stay up to date with the channel. We upload content like this every single week. If you want to embark on your very first investment journey, you should take that first step with Mayberry. Follow us on social media to learn more about how you can get started today. Okay, up first, we'll take a look at Express Catering, and Justin will be presenting on scene. What do you have for us, Justin?
All right, thanks, Dan. So let's get right into it. So Express Catering Limited, for anyone who's unfamiliar with the company, they're essentially the sole distributor of food and beverages within the largest and most popular airport in Jamaica, the Success International, where they provide the food services through franchising various different brands from, locally or overseas as well. They've actually increased from about 24 to 31 stores within the airports, with the most recent expansions to the actual airport. And from there, since recovering over the last couple of years, they've actually done what's even closer to a V-shaped recovery over the last 2 years, because from their best year in operation was 2019, when we had a real surge of tourists coming into Jamaica. They did about $40 million for the year, 40 million USD for the year. And here we see now in the 9 months ending February 2023, ECL actually increased up to 58% from the prior 9 months to $15.1 million. Like, this is their best year from total inception, right? So since then, they've really started to, make themselves more efficient, capitalize on the surge in people coming in, and the sales have the numbers to show, right? So cost of sales increases as we expected. The gross profit has been increased 56%, and as a matter of fact, the operating profit actually increased by 198% up to 3.5 million USD, which is really great considering the fact that they've had to be increasing their promotional expenses, letting people know that they're here, they're back, and are going to be even better than ever going forward. And that has translated, even after somewhat high finance costs, down to our earnings per share for the 9 months of 12 cents, but for this particular quarter, it was 7 cents. So if you analyze that quarter, as I do expect them to continue performing at this rate with, the numbers of stopovers being what they are, people going back and forth, analyze it to about 28 cents, putting their PE about 18.5 times, which is a little bit high right now, but hey, as we get through the more seasonal times of things, as we go through summer, as we get back to the winter year, I'm expecting to actually surpass that at that point in time. So let's see how well they can get it done, especially considering the fact that ECL is supposed to be, that the expansion plans are supposed to complete it by around August this year, assuming everything continues well. And with that, we have more people coming in. 20,000 rooms are expected to be completed by the end of this year. And I don't know if you guys were trying to go out recently this Easter weekend, but almost everywhere along the North Coast and the West End was pretty much booked out. So, there is a lot of demand out there for these things. More people be coming in, more things to happen. So ECL is looking good as far as their income statement is looking, right? If we move on further right now, we see the quarterly profit movement. Once again, this is their most profitable quarter since their history, but at least certainly over the last 2 years. Right? So before it was a bit sporadic, doing great among certain months of the year or certain quarters of the year actually. But then, we had that scenario in 2020. But since then, as I said, it's been pretty V-shaped. They've been surging upwards and they only have more to go, especially when they start to branch out further. So they're deepening the relationships with focus brands. They're going to be providing new food and beverage outlets, not only in the airports, but they're going to be expanding outwards in Kingston and Mo Bay as a test run with brands such as Aunt Anne's Pretzels and Cinnabon. And they're also going to be looking into providing their own proprietary brand, Spice Bar, doing things like jerk chicken and traditional Jamaican flavors, which should be a bit more accretive to their profit lines. So looking at the stock price now, it has been having its up and downs over the last 2 years, kind of settling between that $4 and $5.50 mark, even bouncing up to $7 back in 2021. But I think it's just a matter of the markets trying to appreciate where they're going, if it's going to be sustained, and to see if this price if their operations can continue to sustain it and to continue producing profits, then I think people will be more amenable to buying stock. So Dan, any thoughts on ECL?
Yep, it's one of those tourism stocks that I like, and it's great to see them bouncing back strong. Sort of reminds me of CPJ, but we haven't seen the stock price move yet, as we did see CPJ.
Right.
So if they can keep this up for the next 3 quarters, we know the expansion is not yet complete at the Science Fair International Airport. We know they've got the Bob Marley One Love restaurant
Right.
that's about to open. I think we're going to see, 1 million, 1.5 million per quarter as their sort of benchmark. And with that, I think the stock price, could potentially get to $6 in the next 12 months, I would say. So I think it's sort of fairly priced right now. They're definitely coming out of a rough patch. It's great to see them bouncing back, like you said, with that sort of V-shaped recovery. We'd like to see the expansion completed over the next 3-4 months and then see them getting to $1 million a quarter. So we'll obviously be watching this for the next 2-3
Right.
quarters. And then I think as the PEs get higher, as interest rates come down, they will only benefit from that. And so I think it's a good stock to have. If you can get it at $5, it's a great stock to have in your portfolio to give yourself tourism exposure. We know that their revenues are strongly tied to the tourism stopover arrivals, and we know tourism is expanding like crazy in Jamaica. In fact, there's more likely to be 6,000 rooms over the next
Right.
2 years and 12,000 rooms over the next 5 to 6 years. So these guys are only going to do better. We know the Montego Bay Airport is expanding their runway. So we know it's only going to get bigger and better. And Jamaica's a really strong tourism destination. So this is definitely one to have for the medium to long run. Definitely.
For sure, man. Writing's on the wall.
Up next, Caribbean Cement Company Limited. Good deal. Well, this is definitely one of my favorites. This has to be in your top 10 stocks if you're serious about stocks. And when you think about what's happening in Jamaica, the construction sector is booming. And every time Justin, I see a new high rise going up, I just think cement,
Right.
because these infrastructure require a lot of cement. And it shows up in the numbers, right? So their audited financials just out for the year ended December 2022. And we can see revenues are up 8% to $25.8 billion. The gross profit up 16% to $11.3 billion. They've in fact improved their gross profit margin from 41% to 44%. So that's really good despite the logistical challenges, etc. They're clearly on top of their pricing and the sales, and it just shows the booming that's going on in the construction industry. Operating profit up 14% to $7.8 billion. Finance expenses down 13% to $581 million. And again, just in a great story here, these guys had $6 billion worth of debt 6 years ago. They've worked that debt down to less than $1 billion. So they're well positioned, throwing off a lot of cash. We're starting to see dividends for the first time ever. And net, $5.38 billion of profits. That's a 24% increase, folks. Stocks trading at 57.47, which is only a 9 times PE, and a main market where we think of the Harmeen average as being 10 times, headed more towards 12 times, I believe, by the end of the year. We keep saying we expect the PEs to improve as interest rates come down. And so by my watch, this is a great buy. It's perhaps 25% undervalued as to where I'd like to see the stock price by the end of the year. And with the growth trajectory, it's going to happen, folks. Assets, it's a nice asset-rich manufacturing company that's making huge profits. You don't find many of them listed on the stock exchange. Total assets up by 10% to $30 billion. Shareholders' equity up 27% to a whopping $20 billion. They're throwing off $5 billion cash this year in the cash flow statement. The dividends are going to flow, folks. Trust me. So for the first time ever in the last 10 years that I've watched Carib Cement, we've seen them declare dividends. I think that's only going to get better. For sure, we know they're looking to expand the kiln operations to improve efficiency and capacity, which is another great thing. They've got about $3 billion construction work in progress, and I think they're going to spend another $3 billion, if my memory serves me well, as to what they spent on the last kiln expansion. But I think it's only great because they are throwing off $5 billion cash a year. We've seen for the first time the royalty fee being charged, and that was about $475 million by Cemex. So hopefully Cemex go easy on it, that they won't knock us too hard on those royalty fees. I'm not in love with them, but it is what it is. And so again, even this $5.4 billion profit is after they've taken off that $475 million royalty fee, which is the first time we've seen the royalty fee actually being charged. So I'm actually encouraged by that. Good, strong balance sheet. Inventory is up by about $2 billion to $5.5 billion. Goods in transit's up $500 million. So I think they're preparing for another major outage later in the year, perhaps, and they're ramping up the inventory so that they don't have any huge challenges with that. Trailing earnings, $5.3 billion, market cap, $49 billion. This is just a great, mid-sized cap business. You definitely want to have this in your portfolio. You cannot bet against the infrastructure development and the boom that's going on in the construction sector in Jamaica. This is only going to get better over the next 3 to 5 years. Next slide shows quarterly performance. And whilst the graph's kind of trending a little bit, profits peaked at $1.5 billion. They just did $1.1 billion in this last quarter. But again, we're seeing this $475 million royalty fee featuring. But it's good, strong performance. And I think it is going to get better. When you look at that graph, you can see we only had one really crazy quarter in the last 8 quarters, which was Q3 2021. Back then, I had to jump back, look at the financials. That's when their kiln was offline for major maintenance, and they actually imported cement during that period. Gross profit margins fell tremendously from 40% down to 20%, and the result was, they had a bad quarter. So with the expansion, I think, we may have a quarter that drops a little bit as they look to switch over and do the expansion. But in all, I think we're going to see, 1.5 billion quarters coming in the future on a regular. I think the writing's on the wall. I think this stock's going to get to $70 in the next 12 months minimum, and it's just going to continue to grow because of how well positioned they are. Next slide shows what's happened with the share price. And you can see $70 is not far-fetched. This thing has traded, albeit briefly, as high as $120, but it was comfortably trading over $80, for quite a period, over a year. And so I think in the next 12 months, this guy is going to be back up to, approximately $80, which means you have roughly 30% potential growth to come. So get yourself some carb cement while you have some time. It is really hard to bet against what Cemex is doing over there under the leadership of Iago Castro. We'll try to get him on the program later in the year for sure. But it's a great, rock-solid company running low levels of debt, throwing off a lot of cash, pretty much has a captive market. They've got 27 years of reserve left in terms of limestone. So this is definitely a good long-term bet to have in your portfolio. Justin, those are my thoughts. What are yours?
All right, Dan, great. I definitely do agree with a lot of the points you presented earlier. I do personally have a bit of a longer timeline relating to Caribbean Cement, from not up to the 12 months, but about the 12 to 24 month timeline. Reason being, I'm looking to see, so currently right now, my view is that construction is holding steady. We're not seeing the surge that would have 2019 or beforehand. I want to see interest rates start to reduce a bit more, and then we start to get further into, say, the refurbishing and expansions of a lot of the hotels that we have up on the West End, assuming that, we still have all the same supply and we're able to produce as much as the demand is able to take up, considering the fact that there are still within expansions right now. It's supposed to be completed by 2024. But even if that is the case, but once expansions are done, I believe they're planning to get further into exports. So recently, Arawak Cement Limited in Barbados has laid off 70% of their workforce. Decided that they're not going to be producing the clinkers anymore, which is intermediary material that's used in the whole building process. And I believe that the 30% expansion that we're seeing here at Caribbean Cement is going to be used to make up for that gap, considering the fact that they're all underneath Cemex Limited, essentially, as a parent company. I do like the company. It's great. It's definitely great for tourism. But once interest rates start coming back down, we start heading further back into that developmental stage. And we're going to be continuously getting down debt to GDP. So I know government spending will play a part in that. But I have a little bit more of a longer timeline on about that. But yeah, Caribbean Cement, great company. Going to continue to be doing over $1 billion, $1.5 billion in profit per quarter. And maybe, if we really look, if we see like another $1.5 billion payout in terms of dividends this financial year.
Yep, thanks for that. No, it really is hard to bet against them for the long run. We think of the Jamaica and how we're poised for growth and the need for infrastructure development. So whether it's roads, highways, bridges, housing, low-income housing,
Right.
80,000 homes required, hotels, the boom going on in that side of it. It's clear to me that there's a general boom in construction from commercial to residential to infrastructure. So I'm really excited about it. Get yourself some Carib Cement. You want to have this in your medium to long-term hold bucket because there's no doubt that the stock price is only going to get higher and higher. Well, that's it for today's discussions. I hope you appreciated our review of Carib Cement and Express Catering Limited. I'd like to thank Justin, as usual, for his invaluable contributions. So big thanks, Justin.
No problem, Dan.
Well, folks, if you're curious about updates for our virtual investor forum, then find us on social media. We share our live stream dates and upcoming guests on our social media pages. So give us a follow and stay on top of all things forum related. And don't forget to subscribe to our YouTube channel, Mayberry Investments Limited, and click the bell to receive notifications. Well, folks, keep safe and remember, wise investors, slow and steady wins the race. Goodbye.